Good evening, everyone. This is FXRBS with ForexSimplified.com, and we are with the Monday class. Tonight, we will talk about trading butterfly. I'll give you first a little information, basic information about what butterflies are, how to trade them, where to find those patterns, and how to enter, where to place stops, limits. Then as the presentation goes, if you guys have any questions, I'm sorry guys, some problems with the audio. During the presentation, if you guys have any questions, please type your questions in the chat box, and I will be more than glad to answer all your questions. At the end of the presentation, we'll do a quick market analysis and see if there is any trading opportunities. Okay, let's start. I will just open a random chart. I will start drawing on it. So I can give you an example of what a butterfly is and how we can profit of it. Butterfly first is trend reversal pattern, and this means that if price is in an uptrend, we need to know an area where we believe price will be reversing, and most of the time we find those areas on higher time frames. Let's say, and please disregard those current charts, the current candles. Just look at the drawing. Let's say we're doing analysis on a 15-minute chart, but then here at 124.40, for example, we have daily resistance, or it could be 4-hour or something from higher time frame, place where we believe price might reverse for some reason. It could be a resistance level, it could be a trend line, it could be a big pattern, maybe let's say sell Gartley on daily chart that has convergence, let's say 618 with 127 or 786 with 127. And we believe that somewhere close to this area price will be reversing. We need to look for reversal pattern in this area. And a butterfly would look something like this. And the end of the trend will give us a sell entry at the resistance area. Now we can find butterflies everywhere in the trend all the time. All the time we'll see different reversal patterns. I want to tell you guys that if you trade those patterns, at big levels, resistance coming from higher time frame, level with big importance, those patterns will have a lot bigger probability. Now, if you find butterfly somewhere lower, it doesn't mean that butterfly will work, it doesn't mean that it won't, but it will have a lot higher probability if we find this reversal pattern in area where we actually expect price to turn around. What is specific for a butterfly? Now, first, because most of you guys are familiar with Gartley. Now, Gartley, I will draw first a Gartley so you guys can see the difference between the two patterns. We always have the main swing X, A, then we have A, B, C, D as a subswing. And the entry is at the D, and usually at this D we have convergence of two fib levels, and the two fibs are pulled between the two swings, the main swing XA and then the subswing AB. In Gartley, since it's continuation pattern, the D is formed between the X and the A, between those 2 points. Now, when the CD leg is extended and price goes above X, we have a failed Gartley. Now, we don't look for Gartleys once price goes above X. And usually, if we enter a Gartley, the stop is placed above the X, because once price passes X, the Gartley fails. Now, butterfly, some people call butterflies failed Gartleys. The butterfly will form this D above the X, and it has a few specific convergences that we need to follow in order for this pattern to be valid. Now, first, we pull a fib between the X and the A. What we're looking for when we are trading butterfly is that the B is usually formed at the 786 of the main swing. So here. Then we form the C. Once B is formed, we can now pull the sub fib. And usually the C is formed either at the 382 or sometimes between the 786 and the 86. I will move the C out of the fib so you guys can see the levels. But C is formed either the 382 or 786 and 86. Then we must have convergence of the 127 and 1618. 127 is extension from the main swing XA, and 1618 is extension of the subswing. 1618, 127 for the main swing, 1618 for the subswing. When we have this convergence, then this convergence becomes the sell entry. Later, I will give you guys an example on a real chart, and you will see how useful butterflies can be. And there is no other pattern that can give you better entry than butterfly. I will show you how to properly trade those patterns. Now, once we find the convergence, we'll place an entry, sell. Usually I place the entry sell a couple of pips below that convergence. So right now we have convergence at 124.37. I would place my entry at 124.34, 124.35. $124.34 is the sell. Where do we place the stop? The stop can go in two places. Above the 1618, there is a rule that if price goes above 1618, the butterfly will fail. And this is why we place the stop above the 1618. Usually I place the stop about 10 pips above that level. So 124.75 will be the stop in this case. Also, if you guys use pivot points, you can use the next pivot point for your stop. Let's say there is a pivot level somewhere here at 124.54. You can place your stop 10-15 pips above that pivot point if there is a pivot level. I'll show an example with that as well. Limits. Where do we place the limits? The first place the trend reversal point we find from higher time frame. It could be resistance level from higher time frame, it could be trend line, it could be another pattern. Let's say we have a sell Gartley at this level 124.35.40 on a 4-hour or daily time frame, and we want to fine-tune the entry, we can use a butterfly to fine-tune that entry. Later I will give you an example exactly of a trade like this, where you actually will find the sell point and using a couple of patterns converging together. First, I'm just giving an example and giving you the rules of how to trade, where to place stops and limits. Then we'll look at actual charts and it will make a lot more sense. But it will be a lot easier for me to show you the basic rules on a drawing. First limit I use for butterflies is I pull a fib between the A and the D, and I use 382 for my first target, because this is the first place where buyers might enter in case the trend will continue, because we have been in an uptrend, and I want to make sure that if this trend will continue for some reason, I want to be out of the trade before any more buy orders are in the market, where most likely players would place their orders. First support level would be the 382, and look how nicely the 382 is actually converging with the B. Note that the B will be probably the strongest support right now, and this strongest support is converging with the 382. We want to profit before price hits that level, in case trend continues. So my 382 is at 124.00. My target one would be 124.07. I always put a couple of pips above. This will cover the spread. Now different pairs might have different spread. Usually I put 2 or 3 pips above the spread just to have it as a gap, as a cushion. So if your spread on your currency pair is 5 pips, place your limit 6-7 pips above. If the spread of the currency pair you're trading is 2 pips, place your limit 3, 4, 5 pips above the 382. Now next place where we want to take profit is based on where the C is formed. Now if the C was formed here at the 382, when we pull the new main swing, look how this 382 now becomes 618. Again, very, very strong fib level. A lot of people would enter 618 in a buy trade. If they want to enter long, 618 is a very common area for people, for traders to enter the market, especially when now we have convergence of this low. The C will provide some support. C converging with that 618 level, well, this is strong support level. We want to profit above that level. Now this is where we place the second profit place. Now 123.78 is the 618. 123.83 would be my second limit. And then I can place my third limit all the way down, because since we assume this is trend reversal pattern, I would place my limit at the 127 extension, the last one, This is 123.19, 123.24 would be my third limit. Now, if you guys have a pattern on the big time frame, let's say it's daily Gartley or maybe head and shoulders, or a big pattern that you want to profit out of this pattern, or you can add some positions as limits for that big pattern. Now, we fine-tune the entry with the butterfly of the smaller time frame, but then we can add additional positions as limits for that big price pattern that we want to trade from the bigger time frame. Now, I will give you an example of where and how we can find butterflies. Now, first, I want you guys to take a look at, I will actually delete all this. Now, we're doing an analysis and we see this beautiful butterfly. I'm sorry, this beautiful head and shoulders that it's being developed. And most of the traders, when price is reversing, most of the traders will have their first trade in the opposite direction at the right shoulder. Now, we've been in an uptrend, correct? We've been in an uptrend, trading bullish, bullish, bullish. Now, the first pattern most people will notice is head and shoulders. We have the left shoulder, we have the head, price taking the previous low, eventually coming back to retest the right shoulder, and they use the right shoulder for their entry. Now, what if I tell you guys can enter at the head? If we know this as area with strong resistance coming from a daily or weekly time frame, what happens if we can find a reversal pattern at the head? And here right now, the difference between the right shoulder and the head is not too big, but a lot of times we'll see a head and shoulders that will be formed more like this, and it will make a lot of difference if we can actually enter one trade here and then a second one here. Will be a lot of pips ahead. Now, first, I will delete those flips so you guys don't get confused. But what we're looking at is bearish channel. This is a daily chart. You guys can see how well New Zealand dollar has been trading in this bearish channel for a very, very, very long time. This is still since September last year. Every time price goes to the top, bounces, goes to the bottom, from the bottom goes to the top. Of course, we can have breaks, a little breaks above and below, but in general, price is trading in those ranges. Now, as price gets close to the top side of the channel here, we can start looking for bearish opportunities. We can look at past resistance areas to converge with that level, Fib levels, to see if there will be any convergence. Look at 707 converging with the top side of the channel. So is 786. Now, this area between 7100, 7150 can become our desired area to find a sell entry. This is our resistance area. I will go to the lower time frame. We find 7150, 7100. Between 7100 and 7150, we find this bearish head and shoulders. Now, this is high probability trade. But what else do I see here in this chart? I will go to a 10-minute chart. Now, this setup that we have is exactly that same butterfly, that same head and shoulders that we draw on the 1-hour chart, and we expect the right shoulder to form somewhere here. This at the top is the head. Well, what do we see? Here, this is the right shoulder. Oh, this is also the X. Just give me a second. I want to make those letters a little bigger. Okay, finally. Then we have the A, we have the B. Look where the B is formed. We were talking about 786 level. B is formed right at the 786. Now, C is formed just below the 382. Look, the convergence 127 is at 7151. 1618 is at 7151. Where do you guys think the high is here? Anyone can guess? Your high is 7151. Well, 7151 is the level we want to sell based on that butterfly. And as I said, we always sell a few pips below. So in this case, we'll place the sell entry at 7149. So somewhere here. 7149 would be the sell entry. What else can we do? We can place pivot lines. We go to the daily pivot. And just give me a second. Now in this case, the next pivot is above the 1618, so we won't be using the pivot line as our stop. We will be using the 1618. So stop goes above 1618. Then we said that the first limit is at 382 converging with the B. Here is target 1. Target 1. Target 2 will be at the C converging with 1618. This is target 2. Target 3 is at 127. Now, target 3 is not filled yet. This is the long-term target. Once target 1 is filled, we're going to move the stop from all the way up here to break even. Now, in case price bounces off this 382 and continues to trade bullish, we'll get stopped at break even. We won't lose money and we'll cash out the money that we profit from target 1. Same with target 2. So once target 1 is filled, we move the stop to break even. Now, if this head and shoulders forms the right shoulder, price will come back. Now we can re-enter again, and we can enter a second trade based on the head and shoulders. And now we'll trade that head and shoulders by the rules for trading head and shoulders. I will enter at the right shoulder, stop above the head, then I will place my first limit below the support, then second at 127, or if the right shoulder was shallow, formed at the 618, I will place my second limit at the 1618. Now if we have a good right shoulder formed at the 786, of course I will be placing my second limit here at 127. And now we will have two trades running together, one from the butterfly, second one from the head and shoulders. But before we even traded that head and shoulder, we have captured 30 pips from target 1, another 40-45 pips from target 2, and this is 10-minute chart. We can do the same on different time frames. It doesn't matter what time frame you guys are trading, you can use the same patterns on all different time frames. It can be 1 hour, 2 hour, 4 hour, it does not matter. All those patterns would work on all time frames. If you guys have any questions, I will be more than glad to answer all the questions. If not, I will do quick market analysis, show you a few pairs, and then I will be done with this video presentation. I will go over Euro-dollar daily chart prices right now at resistance. We have 707 level, 124.50 is the resistance level. Next resistance is at 125.80, 126. Currently we can see bearish engulfing candle formed on the daily chart. On a 1 hour, Here we can see bearish head and shoulders being formed. Right shoulder is at 124.10, 124.15. I would place the stop either above the head, or if you guys can find bearish candlestick formation like engulfing bearish candlestick or any other like evening star, tweezer tops at the level of the right shoulder, you can place your stop just above the candle enter short. Have two targets. First 123.15, second 122.63. Again, we need to have the price come all the way up to 124.15 before we sell. And as I said, we need confirmation. We need bearish candlestick formation. And why? Because there is stronger resistance formed about 100 pips higher of the current high, of the current head. So price might just be continuing to trade bullish. Of course, since this is also resistance area, if we see confirmation coming from the 1 hour with bearish candlestick formation, we can sell this head and shoulders easy. Pound dollar, similar setup. Here we have 786 pullback. AB equals CD converging with that 786 at 148.70. We've been waiting for this level for a few weeks. Bearish engulfing candle. Absolutely the same setup. Price is giving us bearish head and shoulders. We will be looking for an entry somewhere near 148.80. Now note that price is forming, and if you look at it on 15-minute chart, let me see if I have a 15-minute chart here. Price is forming bearish flag also. Now if the Asian session has big volume and can break that daily low that we formed here, and this is a strong low, we can see price just continue on trading bearish. Now today there was a talk, it was actually like an announcement from Bank of England about a double dip recession. Now this is not good news for England. We can see pound sink. So if Asian traders also sell off the pound, we most likely won't see that pullback for the right shoulder, and most likely is that price will just continue to trade bearish. So pay attention to this bearish flag as well. If price breaks bearish, enter bearish and don't wait for that bearish head and shoulders to form. Another setup I can give you is, again, daily chart. I'm always starting from a daily or 4-hour chart, and I see a few of you guys had the question of how I find those reversal areas. Well, look at this. This is daily chart, good example. We have the X, we have the B, C, D. Now the D, 786 with 1618, nice Gartley. Indecision candle, beautiful setup. We go to a smaller time frame. Now the patterns that I'm giving you, all those are head and shoulders, nice patterns. 1-hour chart, bearish head and shoulders, right shoulder at 88.20, 88.25. Now we have nice resistance from the daily, indecision candle, nice bearish signal. Then we go to the 1 hour chart and we fine tune the entry. We'll wait for the right shoulder, entering at the right shoulder, stop above the head. Again, first limit is the first low, second limit 127. Quick and easy. Now, if you guys want to add more positions, like I said earlier, based on the daily chart, we have bearish guard. Now, what can we do? We pull a fib from the A to the D, and we look for convergence between the B and one of those fib levels. The convergence is at the 382. 382 is 85.61. So 85.61 can be one of the next targets. 85.61. 85.61. 85.61. Here we can have target 3 if we want to. This is how I place the position targets. Now we have target 1 and 2 based on that head and shoulders. Here, target 1 and target 2. Then we have target 3 based on the daily Gartley. And where would be the next target? I would place 618 or 786. I can do both, and I will just trail the stop on each next target in case price turns around and decides to move bullish. I will still make money on my remaining positions. But if price continues to drop, we can make a lot of pips out of scaling one head and shoulders. So we're fine-tuning the entry here. We can enter not just 2 but 3, 4, 5 lots, all those lots with different targets. Now, if you can't afford placing all those lots, what you can do is you can scale. If you're usually trading, let's say, a standard lot, you can go to mini lots. That's, instead of placing 1 or 2 standard lots, we'll place 20 minutes and use 3 or 4 targets for those 20 minutes. Those 20 minutes equal 2 standard lots. So you'll be able to have like 5 minutes here, 5 minutes here, 5 minutes here, and then 5 minutes at a target lower. And of course, that setup that we have here on the New Zealand with that head and shoulders. I want to thank everyone for joining me for this presentation today. If you guys have any questions, feel free to send me emails. Next week, we'll have presentation about trading crab. This is another price reversal pattern. I hope you guys enjoyed this presentation and it was helpful for all of you. I will be glad to see you all next Monday. I wish everyone safe trading and have a good night. Bye-bye, everyone.